Good afternoon, everyone. Thank you for joining in. This is a very apt webinar that we're having today. It's Budget 2025 Explained for Salaried Professionals. I'm Purvi Sardar from Happiest Health, your moderator for the next 1 hour. So as we are stepping into the new financial year, it's the perfect time to understand how the latest budget impacts our salaries, savings, and taxes. Let's dive straight into the key highlights, and towards the end, we'll also take some of your questions. Today, we have with us Shantala Kumle. She is the Senior Vice President at International Money Matters Private Limited. She is a certified cost accountant, certified financial planner, and a certified financial transitionist. Her expertise includes tax and estate planning. With over 2 decades of experience in the industry, she provides unbiased and honest advice to clients. Thank you so much for being here today, Shantala. Shantala will be leading the first 45 minutes of the session, and the last 15 minutes will be open for a quick Q&A. Please feel free to post any questions or comments that you might have in the chat window. During the last 15 minutes, you can also unmute yourself and ask your question. A humble request, please do ensure you're on mute while the speaker is speaking. And a quick reminder that the recording of this session will be available on Wellbeing on the web in a few days. Without further ado, the floor is all yours, Shantala.
Thank you for the lovely introduction, Purvi. Hi all, good evening. Let's straight away delve into the session. Yes. Yeah, are you able to see my screen, Purvi? Can you confirm that once?
Yeah, it's visible.
Yeah, okay. So what we'll do today is just quickly go over the highlights in terms of what's the budget 2025 has brought for us. And there is some kind of a confusion on what can be considered for the new regime, what under the old regime, what makes sense. So maybe at the end of the session, you'll get some idea about what is it that we can do to reduce the impact of taxes and which is the regime that we can opt for. And though everything is in, it's all there in the act, sometimes the interpretation matters a lot. So we have understood this a little deeply with various chartered accountants, understood what's the implication of taking one over the other, and then done with this presentation. So we can all take questions at the end. And if there are any questions post that, you can always write to us. Yeah. Are you able to hear me?
Yeah, I would just request everyone to go on mute. You are audible, Shantala. And just
thanks.
Reminder that please go on mute, audience members. Thank you.
రికార్డింగ్ క్లాస్ వస్తుంది అనుకుంటా నాకు నేను పంపిస్తాలే అయితే
Yeah. So basically we'll go over the budget overview. What are the changes that has come in this budget 2025? What is that 87A rebate that all are talking about? What are the regime factors that will help us reduce the tax? How is old regime still relevant? Is it still beneficial? And what are the circumstances under which it will be beneficial? How is it that old regime still becomes relevant in certain cases though? Tax implication on high value retirement contributions that we make. So what is it that we need to be aware of? Provident fund retirement benefits and how the budget has impacted that. The changes in ITR filing compliance and the forms that are available. Conclusion, basically just an overview of again, come back into this. Sorry. I think Purvi, we need to mute all and possibly.
Yeah.
Is there an option which we have to mute everyone?
Yeah, okay. I'll do that.
Right. So basically on the key highlights, the GDP projected to grow between 6.3 to 6.8 for the financial year 25-26. This is a very important aspect. Income up to 12 lakhs has become tax-free under the new regime. So does it make sense for everyone to jump into the new regime, or is still there a benefit in the old regime is what we will see further. But yes, new regime has become very attractive, and that's what the intent also of the finance minister has been, that more and more people move to the new regime, and that in a long way will also simplify things. There are even administratively for a lot of companies, and even for the tax SSEs, it's a lot of simplification. You don't have to keep bills, etc. A lot of cases where the deductions, etc., has gone away. Books and periodicals, uniform, transport allowance, a lot of stuff has gone away if you go for the new regime. So yes, it is a lot of simplification. The TDS limit for the FDs has got raised from 50,000 to 1 lakh. So depending upon whether there is a PAN card available or no PAN card available, it ranges between 10 to 20%. For those who have kept FDs, there is always a TDS that is applicable beyond this limit. So the limit has gone up. So a lot of senior citizens have benefited from it. Rental income, again, the limit from 2.4 lakhs to 6 lakhs is made for the TTS. So income tax will still have to be filed going by the tax bracket. This is just for the TDS. The limits have gone up for the tax deduction at source. And of course, because of various other rules that have been brought in, the idea is to simplify compliance. The easier forms, there's some pre-filled forms made available, etc. So the tax compliance part of it is simplified. Now, let's broadly look at what are the tax slabs available, both under the old regime and the new regime. When you look at the tax slabs, you can very clearly see a distinction where 8 to 12 lakhs onwards, there has been a reduction in the rates under the new tax regime. That's because a lot of allowances, etc., which were allowed under the old regime has gone out of the window now. The ATC, HED, will come to that, what is allowed in only the old tax regime. But all the exemptions and allowances are not allowed under the new tax regime. And what they have straight away done is reduce the tax incidence. The rates of tax have got reduced. Right? So how has it helped? One is definitely the new tax regime is a preferred choice for many individuals, because one is it offers lower rates and very simple calculations for people. You don't have to really take into account a lot of exemptions and stuff like that. So a lot of simplification, and also a lot of disposable income on hand as well. So salaried individuals with lower or middle income group, the new tax regime is definitely a way to go. But one thing what we have, there is always an option. Though the new tax regime has been made the default regime, you still have an option to go to the old tax regime. But one thing what you need to keep in mind when you are moving between regimes, right? Last year even old regime, now new regime makes sense. So next year again maybe old regime makes sense because of certain reasons. I'll come to that when old regime makes sense. But just in case you were to toggle between these regimes, if you have a business income, right, then the toggling between regimes can happen only once. So make sure that you toggle between these regimes only if you have a non-business income. And if you have a business income, then be very sure that whatever regime you select is the final one. And then you can't make the changes to the regimes irrespective of what the circumstances will be. So as far as there is non-business income, you're a salaried individual, capital gains and all is fine, but there is no business income is what. Suppose you are a partner in a partnership firm, you're a part of a LLP or any other business income that is coming to you, then you will not be able to shift among the regimes. You will not be able to shift between the two regimes. Yeah, we'll just take a quick example of incomes up to 12.575 lakhs here, and how this budget has made the tax liability literally zero for income up to 12.75 lakhs. So again, I have shown the new tax regime rates on the left-hand side. Right-hand side is the actual tax calculation for somebody who has a 12 lakhs of income. So if you have a 12 lakhs of income, I'm assuming that 12 lakhs is after all your employer contribution of PF, etc. Net is 12 lakhs. Taxable income is 12 lakhs. In that case, your tax liability will be 60,000. And what happens if the tax liability is 60,000? There is a straightaway 87A rebate that is given up to 60,000, typically making it zero. So up to 12 lakhs of income, there is no tax liability. There is one more additional exemption which is given under the new regime. It is 75,000 of standard deduction, which is 50,000 in case of an old regime. In case of in new regime, the standard deduction is 75. So what does that mean? Up to 12.75 lakhs of income, you typically your effective tax rate, you will pay zero tax at these levels of income. I hope this is clear. If you want, we can elaborate it when we come to further cases. But there is something important to understand here. What is this 87A rebate? Does it apply to all income? So we are talking of only salaried income here, but all chances that you have other sources of income. You will have house property income, you will have capital gains, you will have short or long-term capital gains, you may have some lottery winning or crypto gains, etc. Now, there is a particular rate in which each of these incomes are charged to tax. They're not the usual rates. They are called incomes which are charged at special rates. So, what the Income Tax Act or the budget says is this particular income or all these incomes like short-term, long-term gains, lottery, crypto gains, etc., are taxed at special rates. So now you can't apply that 87A of 60,000 exemption for these incomes. So as far as you don't have these incomes and 12.75 is your income from salaries, entire 60 can be applied to that. But let's say you have an income of 15 lakhs, which means 12.75 lakhs of salary income and other 2.25 lakhs of capital gains and other income, which is specified here. In that case, you will still need to pay tax on those special rates. So short-term gains, depending upon whether it's equity debt, whether it's at your tax bracket of 15%, you will have to still pay tax. Long-term gains, now the indexation has gone away. I will explain a little later, maybe when we come to Q&A, what was the change that has brought in, right? Last year, the indexation has gone away and the long-term capital gains, be it debt, has been charged at 12.5%. So those income will still be charged at special rates. And you won't be able to say that, this is 12.75, including all that. I use my 87A rebate for that. So that you will not be able to use. So those special rates will still apply. So let's say your income is 10 lakhs, you will still not be paying tax up to 10 lakhs. But if that 2.75 lakhs is an income which is forming a part of any of these gains, you will still be liable to pay tax. Okay. Now, there are ways in which, though we say there are no allowances that are allowed for the new regime, there are still ways in which you can reduce tax. So what are the ways in which one can reduce tax even under the new regime? What are the various factors that we can consider and take into consideration and apply for those? For example, though you can't make a separate investment of up to 50,000 in NPS, that if you make, it's not considered because that is considered only under the new regime. Your contribution, you will not be able to claim that under the new regime. But if the employer is deducting and paying on your behalf, just like how PF deduction is made as a corporate contribution by the employer, up to 14% is still possible to consider for reduction of tax. Whereas this is 10% in case of old regime. This is increased to 14% in case of the new regime. So still there is a benefit. Almost 14% of benefit, 14% of your basic is a straight away benefit that gets deducted from your taxable income. So in case your companies do not have the NPS contribution from the employer already registered, it's time to talk to your HR, and if there is any help required, we can help you out with it. It's a simple registration. Even if one person wants to contribute towards this, it's a simple company contribution, company registration for NPS, and that person will be able to save 14% of the basic as a straight tax. There is another option called the car lease. So what typically happens when you take a car? You normally take a car loan, right? When you take a car loan and you pay installment to the loan company, the EMI which you pay is not a deductible expenditure. You pay it out of your taxed income. It's not a deductible expenditure. Whereas if the car lease is provided as a structure from the employer, in that case, the entire car lease amount gets a direct deduction from your taxable income. Meaning to say, if 1 lakh or 1.5 lakh is your take home salary, and car lease is about, say, 35,000 roughly for a 10 lakh kind of a car, the entire 35,000 gets deducted from your taxable income. And you will have to pay. So if one had said, let's say 15 lakhs of salary, the 35,000 into whatever the number of months, close to 4.5 lakhs is a straight away deduction from your 15 lakhs or 20 lakhs, 25 lakhs, whatever the CTC may be. This is a straight deduction. So quite a bit of a tax saving happens. And there are a lot of other things which you will get along. You get a deduction for driver salary. If you keep a driver, the lot of petrol reimbursement that can be claimed along with car lease. So that again is a lot of tax benefit. So people in the higher bracket, instead of going for a a car loan, make sure that in case there is an option of a car lease, or speak to your HR if a car lease can be introduced in your companies, and go for the car lease option. There is one more thing that can be claimed under the new regime. Most people think telephone, mobile reimbursements have gone away from the new regime, but no, these reimbursements can still be claimed under the new regime. That's still possible to claim them under the new regime, but these are reimbursements. So it is important for you to produce the bills, and there will be a limit. I mean, when you when your salary is getting, can you mute, please? Yeah. So when the salary gets structured, there can be these reimbursements up to a certain limit can be a part of the salary. And up to that limit, I mean, it can't be a unreasonable amount, but whatever telephone, mobile bills come on a regular basis, up to that amount, it can be part of salary thing and can be shown as reimbursements. And once these bills are submitted, this can be a tax-free amounts in your Form 16. There's one more important thing that you can consider, which is interest on loan for let out house property. So in case you have a house which you have let out and there is a loan against it, so this interest you can still be able to claim from the rental income, and that is also in a big way going to reduce your impact of taxation. So one important thing we need to understand is, in your old regime, both interest on loan, whether it's a let out property or a self-occupied property, were allowed. Right now, in the new regime, you will not be able to claim up to 2 lakhs of self-occupied property interest. So what was happening, let's say you have a house property which you have self-occupied and there is a loan against it, right? So basically there is no income that is derived from the self-occupied property, but you are paying an interest towards the loan. So it's in minus, right? So up to 2 lakhs, you could take it as a negative and show it as a loss from house property and adjust it with your salary income. That's what you could do when you were in the old regime, and you can still do that if you are in the old regime. But if you are moved to a new regime, you will not be able to claim the interest of 2 lakhs. And if there is any proper house property that you have let out and you're collecting rent, from the rental income, you will be still able to set off the interest. So let's take a case of how, in case there is an income of 24 lakhs, how the new regime will impact in terms of tax. I'm only talking of the new regime here. The old regime I will come to much later. Where it makes sense to still go for the old regime, we'll come to it much later in the slides. So what happens when you have an income in the range of 24 lakhs? Yeah? Roughly about 3 lakhs will be the tax impact. I'm not considering cess, etc. That could be a little more than that, about 4% over 3 lakhs. But let me take a case where a straight income tax is about 3 lakhs, 24 lakhs of income, and 3 lakhs will be your total tax liability. And what is it that you can do? These are the various things that you can do in the new regime and still be able to reduce the tax liability. So let's say your NPS contribution, let's say your 10 lakh of basic in the entire year, 14% of that. So 1,40,000 entirely gets deducted. So from your 4 lakhs, which is the highest tax bracket of 25%, that 1,40,000 gets deducted. And thereby this 1 lakh will further reduce to that extent. If there is a car lease option or telephone option or a mobile conveyance reimbursements that you're taking, these can be claimed. So there is an opportunity for you to reduce the tax further. Let's say all this put together is about close to about, let's say 4 lakhs. Then almost 1 lakh you will be able to save, and 2 lakhs will be your tax liability. So make sure you judiciously apply for these, or make sure you talk to your HR and see if these can be a part of your compensation structure and be able to claim these when you are in the new regime. Now let's take a look at whether old structure has totally become redundant or there is still merit in taking old regime in certain cases. So what is typically happening, if I have to go back a little and see the structure levels, right? So here you will see a difference in the way the percentages are changing. The percentages have got reduced in the new regime. However, if you see 5 to 10 lakhs, there is a 20% charge, which is far above 10%, almost double. But there are a lot of deductions which the old regime still gave us. And what were those deductions that the old regime gave. I'll come back to this slide earlier when the total of all these amounts in the old structure is this particular amount which is shown on the right hand side, and your income is what is there on the left hand side. The old tax regime just makes much better option. But let's see what are the various aspects or what are the various allowances that you can still opt for in the old regime. Your ATC benefit, a lot of you have ATC deductions automatically because you're contributing to the EPF anyways. You have insurance, life insurance, you have ELSS, you have NSC that you're doing, you're investing in PPF. All this comes under part of ATC. Up to 1.5 lakhs, it gets a straight deduction there. ATD, whether you're covering yourself for health as a family for your own, your spouse and children, or you're covering your parents as well, and whether they are also senior citizens, where you are also a senior citizen and the parents are also senior citizens, all this depends upon how much you can claim, right? So if you are only doing it for your spouse and family and all of you are under the age of 60, 25,000 is the straight deduction that you can claim under ATD. But let's assume you are also senior citizens, you and your spouse are senior citizens, and your parents are senior citizens, obviously. So entire 1 lakh can get claimed up to the premium that you pay for health insurance. All these are not deductible expense or allowance under the new regime. So if you have health insurance premiums, which is covering you for life, for the health cover up to, and the premium is going up to 1 lakh, so that can be a easy deduction for you. So 1.5 lakhs and that 1 lakh almost up to 2.5 lakhs can be a straight reduction. Standard deduction, of course, is 50,000, which is automatically given, which is 75,000 in case of new regime, but here it is 50,000. You may be staying in a rented house, and house rent allowance is also something that you can claim based on what the rent is, based on what your basic is. Leave travel allowance again is available based on when you travel in a block of 4 years, twice you can claim it. Interest on housing loan, this again is a big deduction. If you are living in your self-occupied property and there is a loan against it, as I said earlier, up to 2 lakhs you can claim as a deduction. And this will be shown under loss from house property, which gets set off from your salary income. So this again is huge. If you have taken an education loan for yourself, your spouse, or your kids, the entire interest that you pay is again taken under consideration for as a deductible allowance under the old regime. Any donations that you make, depending upon where you make the donation, up to 100% or 50% becomes eligible. Interest on savings account becomes again eligible for up to 10,000. Children's education, of course, that's a very small amount, not very substantial to speak about. But if the sum of all these allowances, right, comes to close to 5 lakhs in case of a 10 lakh salary or 17 lakh salary, and it is 6.5 lakhs, the total of deductions, or your salary is about 35 lakhs and all these deductions come to about 8 lakhs, then opting for the old regime still makes sense. Again, one important point, as I said earlier, to keep in mind, make sure you're not having any business income in your income. If there is a business income, then you will not be able to switch between the regimes. You can make once a decision to change, and post that you will not be able to come back to the new or the old regime accordingly. So it's important to see what are the various deductions that you will still be able to. Apart from that, there are some special like ATU, depending upon some specific illnesses, etc. I'm not covering that into detail, but there are a lot of deductions available under the old scheme for specific illnesses, for taking care of a family member who is terminally ill, etc. There are some specific clauses and specific deductions allowed. Right? So that is about the old regime. Old regime still makes sense if your total deductions is about that particular limit. So if it is, if you feel there are a lot of these available to you, then it is always important to make a quick math about whether old regime is making sense or the new regime is making sense. And you have those calculators available online in some of the websites, etc. You can just go use them and see which scheme makes sense before you decide on the scheme. Tax implication on high value retirement contributions. This is an important thing. Most often we don't see these limits and go about making a VPF contribution when we are doing our own contribution. So it's important to understand these limits when it becomes taxable. let's say an employer contributes towards your EPF, towards the NPS, the corporate NPS, what I spoke about, or if there is a superannuation allowed, a deduction allowed in your companies. So if the total deduction is exceeding 7.5 lakhs in a financial year, then the balance will be taxable in your hands. So though they are retirement benefits, there is this possibility that it could go beyond 7.5 lakhs. So you need to have the visibility of what is getting deducted. So you may think that it's a big tax deduction and apply for NPS, because I have told 14%, you have opted for new regime and opted for corporate NPS. So 14%, yes, it is tax free. But if the total contribution exceeds 7.5 lakhs, then for the balance, you will still be charged to tax as a perquisite. So make sure, keep an eye on all the employer contributions, that it is not exceeding 7.5 lakhs. And it's also quite possible that you may be doing VPF, voluntary contributions as well. So accordingly, once you get a visibility of what is the deduction that's happening, you can possibly stop doing the voluntary contributions, voluntary PF contributions. Similarly, if your own contribution is happening, right? It's happening towards EPF, it's happening towards NPS, you're making that 50,000, etc. You're making VPF. So when you're doing all this, if it crosses 2.5 lakhs in a year, it will still be charged to tax on the excess. So it's important to see what you are contributing and make sure that it is within 2.5 lakhs. Sometimes it is within your hands to see if you can do like the VPF, but sometimes it is not. Your salaries are higher, the EPF still goes beyond. There's not much you can do unless you want to reduce the EPF, which may not be a good thing. Sometimes tax is not everything. You'll also have to think about the benefits it's providing you in the long run. So if you're continuing doing EPF, there may be a small portion. And if you all have opened your passbooks of EPFO, it will clearly state what is the amount that is getting taxed in that particular financial year. So accordingly, you could decide what is it that you would want to do. Yeah, this is just an overview of provident fund and retirement benefits, what's happening. ATC, EPF and PPF are not admissible under the new regime. NPS contribution, employee contribution is not again allowed in the new regime. The old regime, still you can contribute additional 50 or whatever amount you can want to contribute, but the taxable limit is 50,000, what it is eligible. If you don't have ATC, then even 1,50,000 you can claim by just investing in NPS. But under the new regime, only employer's contribution is deductible. You will not have any additional tax benefit for making your own contribution to NPS. Right? And as I said, the contribution from a corporate standpoint, under the old regime, only up to 10% is allowed, whereas in the new regime, you can go up to 14%. Thresholds for contribution, as I've just said, about 7.5 lakhs. Make sure that the employer contribution is not exceeding 7.5. If it is, then you can take a call whether you still want to go for the corporate NPS or not. Yeah, that's about Provident Fund. There's some changes in the ITR filing and compliance that have happened. A lot of simplification has happened. It's an easy filing process now. A lot of pre-filled forms are available. The refunds are getting processed faster. I don't know how the thing has been, but from what we have also heard from people who have got refunds, quicker refunds are being processed. In case that is not happening, then it's time for you to just go into a portal and see what has happened and follow up with your chartered accountant if you're filing through a CA, or follow up on your own through the portal. New default tax regime. So the new regime has always become a default regime. If you want the old regime, then you will have to opt for it. It's not by default. By default, it is a new tax regime. These are basically some of the ITR forms that you should be using. For people who have been filing on their own, you would possibly know all this. If you're filing through chartered accountant, the chartered accountant would take care basically which particular form you need to use. So if its income is less than 50 lakhs, then it's the Sahaj, which is ITR 1. If it's beyond that and it is for individuals and HGF who do not have who are not having income from business or profession, again it is ITR 2. So ITR 3 for business and profession, proprietary or freelancing individuals and HUFs, and 4, 5 accordingly, depending on what. I'm not getting into all of them because most are, I'm assuming, individual salaried income in this group. But yes, you'll have to look into which is a particular form you need to use for filing tax return. Yeah, so just in quick conclusion, the impact has been positive. The idea is to have more disposable income in the lower income group or the middle income group. This would also lead to a lot of consumption and growth in the economy, is what the finance minister has foreseen. The taxes are lower, the exemptions are high, the standard deductions has got increased, etc. Retirement planning can be improved again because the NPS, the percentage contribution has gone up to 14%, and the GDP is, as suggested earlier, it has been forecast between 6.3 to 6.8%. This is the quick view. But just in conclusion, I would like to highlight this, and I do it every time I do this session. Tax saving is not everything. That is something which all of us need to keep in mind. We have to see the financial planning as a whole and just not tax planning. Sometimes what happens, this was happening much in the old regime. You would just go and buy an insurance plan just because it saves tax. You will not be able to foresee what is the cover you actually need. The right at the moment I want to save tax and take some insurance plan may suit you, may not suit you, may not be ideal for you, may not be sufficient for you. So those are the things which you have to keep in mind. Never take things only for the purpose of saving tax. Look at it more holistically. Get a financial planning done. Financial planning is a lot more than tax planning and mere budgeting. It's a lot more. Are your risks sufficiently covered? Have you got enough covered for your emergencies? Is your health covered? Have you done your will? Are all your goals planned? Are you investing right? What is your risk profile? What are your short-term goals? What are your long-term goals? Are you investing according to your goals? There's a lot of things that happens in a financial plan. And I know at the moment you feel tax saving is most important, especially when it comes to the year end. But that is not all. Make sure you are planned for the entire financial journey and just not for your taxes. So it's important, in case you can do on your own, if you have the expertise and the time, you are the best judge. Please go ahead and do a financial plan in whatever way you can. But if you are not able to do that, either because of time or expertise or lack of it, please go to an advisor. And life is far simpler, trust me, when you go to an advisor, because a lot of handholding happens, and handholding not in just in terms of information, also in this kind of markets where there's a lot of turmoil, there's a lot of behavioral management also which happens. So it's important to think big, think right. So do a detailed financial plan if you have not done already. And tax planning is just a very, very minuscule portion of your entire financial journey. That's not the whole of it. I would like to end here and take questions.
Awesome. Thank you so much, Shantala. That was a lot of insights in just under half an hour, but that's great.
Yes.
So we'll start with the questions. So first question, is PF taxable?
Sorry, can you repeat that?
Is PF taxable?
PF, EPF?
Yes. Yeah.
Yeah. So EPF is not taxable, but if you remember, I had shared a screen on employer's contribution not exceeding 7.5 lakhs, right? So if you are in a tax bracket where the employer's contribution to EPF is going well beyond 7.5 lakhs, the balance portion will get taxed.
Okay.
Does that answer your question, or is there still a confusion?
No, I think that should answer the question.
Yeah.
The next question is the meal card allowance allowed as a deduction under the new regime?
The meal card, no. The meal card allowance is not allowed as a deduction. There are very few things which are allowed, which I had pointed out. One is the NPS contribution that happens, or the car lease, internet and mobile. These are the two things which will they will allow, and even some travel reimbursement can happen. Apart from that, no allowances can be claimed under the new regime.
Right. In the new regime, does the EPF attract any benefit under ATC?
Under the new regime, the ATC is not available. So if you're making an EPF, that's for your retirement corpus. It's a good thing to continue with EPF, not necessarily because it's offering tax benefit, because in the new regime, there is no ATC that you can claim as a benefit.
Right. This is with regard to the NPS contribution. So the 14% of basic, does this have any limit for tax exemption like 50K or
No.
75K?
No, there are no amount-wise, there is no restriction, absolutely. But because it is again coming under employer's deduction and employer's contribution, be watchful of that 7.5 lakhs.
Okay. So
Otherwise, there is no
telephone,
amount-wise restriction.
right. The telephone and mobile conveyance, the reimbursements that you spoke about, that's only for the employee's mobile phone, or also employees' dependents can avail that?
No, it's only for the employees.
And the variable pay and night shift allowance, that's also it's considered for tax?
No, it will be considered for tax. There won't be a separate exemption for that. It's a part of salary.
Okay. The LTA is also under company's reimbursement. So can that be claimed in new regime?
New regime, no. Old regime only, it can be claimed, the LTA.
Okay. How is the VPF and EPF considered for tax in the new and old regime?
Okay. So the EPF, there is not too much change, irrespective of whether it's an old regime or the new regime. The deduction from the employer is always claimable. I mean, that doesn't get taxed in both the regimes. VPF also, it's the same. It doesn't get VPF. There is no ATC particularly. That's gone away, right? Because VPF is your contribution. It is not the employer's contribution. Employer's contribution always gets deducted, whether it's an old regime or the new regime from your CTC. That is claimable. But your contribution is, your ATC is no longer there. So in new regime, it's not going to benefit you tax-wise. From a retirement perspective, you still want to do it, you can do it. But from a tax angle, it's not going to benefit you. Your contribution it is, because that forms a part of the ATC and that cannot be claimed.
Okay. The interest for loan value is the same at 2 lakhs, even for the old regime. That is if the property is rented.
See, what happens in an old regime is, whether it is a rented property or self-occupied property, all your properties put together, the maximum interest that you can, not maximum interest, maximum loss that you can claim. There is a difference here, because interest can be more, but because there is an income, your actual loss may be less, right? So your actual loss which you can claim under the old regime is capped at 2 lakhs in the old regime, right? In the new regime, you will be able to claim the interest only for the let out property, not for the self-occupied property.
There's yet another question for the telephone and bill. Does
Right.
that vary as per salary in new regime, or what's the limit for that?
So it depends upon how the salary is structured. See, as far as it is well within the limit. So if you're saying up to 2,000 in a person's salary at this particular level, it can be claimed. So up to 2,000 can be claimed. The reimbursement can be claimed. Even if it is above that, it is fine. If it is lesser than 2,000, then only to the extent of the bills given, it can be claimed. But it can vary based on the levels in the organization. It can, it's for the HR to design the salary structure accordingly. But it can't be something really abnormal. It has to be well within the limits. It becomes extremely abnormal. Suppose you say 20,000 internet bill and you give it as a salary and some bills are submitted, that won't be allowed, because it crosses the reasonability test, right? That the IT authorities will question that. So as far as reasonable, 2,000, 3,000 mobile internet can be claimed.
Right. Also, there's a question about what if the house is given for rent, but I don't receive any rent for the past, few months. But there is a bank interest, like there is on EMI. There is an interest, and can it be considered for new regime? This house property.
Yeah. If you have let out and you're not receiving rent, there is a fair rent which is anyway subject to tax, irrespective of whether you receive rent or not. Because that rent, there is all the possibility that the person may be paying cash. No, the tax authorities will curb that. So there is an amount called fair rent, which they will assume that you are getting, and that will be subject to tax. From that amount, you will reduce this interest which you're paying towards the loan. And only the balance, if at all there is a positive, the balance gets taxed, or if there is a loss, that gets adjusted with the salaried income.
Right.
If I'm not clear, you want with an example, or is that answering the question?
That should answer the question.
Okay.
Can I have both PF and NPS, like 12% PF and 14% NPS from basic?
Yes, you can have. And it is the deduction, because it's employer's contribution, the whole thing is not will not be taxed, provided it's within that 7.5 lakhs limit.
Okay. So there's a question about saving banks interest up to 10,000 not claimable under new regime. And if it's outside salary.
Yeah, it's not claimable.
Mm.
New regime, it's not claimable. You can only claim it under the old regime.
Any max limit for donations to charitable institutions?
No, there is no max limit, but there are certain institutions which allow 100% of the qualified amount. Some allow 50%. So those are specified in the IT Act. We have to see which are the ones which have 100% eligibility and which have 50%. Again, these are all available only in the old regime, not under the new regime.
Right. Can I claim interest of housing loan for a land in old regime if I'm planning to build the home next year, like in May 2026? So,
No. It can't be claimed now. But what happens is, if you have already your EMIs have started, right? There's something called pre-EMI, which you're already paying. So some of the financial institutions still end up giving a loan, saying it's a composite loan. You have to construct within a year from the time you have taken the loan. So there is something called pre-EMI. So once the construction is complete, this entire pre-EMI can be claimed over the period of next 5 years, along with that year's interest.
right. Does the new tax regime consider Section 10 for the children's education CEA and children's hostel allowance?
No, new regime doesn't allow that.
Okay. Siblings education, can that be claimed?
New regime.
No, this is irrespective of any regime. I'm guessing the
See,
old
if a
regime
sibling
itself.
is shown as a dependent, then I guess it can be claimed under the old regime. But let me just confirm. But from what I know, it is family, immediate family, spouse, and children. But whether a sibling can be done or not, I need to confirm that. But that's still possible only under the old regime and not under the new regime.
Right. Is the 7.5 lakh inclusive of VPF, EPF, and NPS?
Yes, all put together. Won't be VPF, because VPF is employees' contribution, right? That 7.5 is only for employers' contribution.
Employers.
So NPS, where there is a corporate contribution, NPS and EPF. These are the two things which our superannuation fund. These are the three things which will get considered. Your own VPF will be considered for the 2.5 lakhs, which is the limit for the employees' contribution.
Right. In total, is 10 lakhs contribution allowed for both employer and employee contribution?
Can you repeat that?
Totally, is 10 lakhs contribution allowed for both employer and employee contribution?
Yeah, that is allowed. That's not, there is no restriction on that. The limits are separate for it to be taxable. Not that it can't cross, just that if it crosses, a portion will be taxable. Otherwise, there are no limits.
Right. There are some questions which are very company specific. So I would suggest or encourage attendees to, take that up with your respective HRs.
Sure.
They can help you out better. Um,
Yeah, someone has raised their hand, I think. Sachin.
Yeah, you can actually put your questions on the chat.
Yeah.
They'll be taken there. So let's actually go from down up. A higher education loan for children who study overseas, whether the interest eligible for tax exemption in the new regime?
No, not allowed.
Okay.
80 it comes under, it's only an allowance under the old regime.
Okay. Okay. If our income is less than 12 LPA, even after adding the profit we gain in crypto, do we still have to pay tax?
Yes, yes.
Oh.
Under the special rates, you will still have to pay.
Okay. Can we select old regime now and move to the new regime at the end of the year? 2025, 2026?
That depends on the HR actually. If they allow you to do that, you can still do that because you're just declaring in the beginning of the year. But at the end of the year, if you feel this is what makes sense, you can still change it. Declaration is still okay. But you can also change between regimes for each financial year. Unless you have business income, you can change it. For 1 year, it can be old, and the next year, it can be new, and vice versa.
What if we already have an NPS account and we want to bind that with the existing account with the employer provided NPS?
Possible.
Can I claim housing loan interest for a loan for a purchase of a flat, but this is their third property?
See, they will allow two properties to be shown as self-occupied property. If you're letting out this property, then yes, in the new regime, you will be able to claim it. But in the old regime, only two house properties can be claimed as self-occupied properties.
Right. So this is an attendee who's saying, I believe indexation benefit for capital gains from real estate is over now. What is the cutoff date of property sell-off date, like to be covered under the indexation benefit?
So there is a sale date. I don't really recollect the date, but I can just confirm that to you. If you can separately write to us on that. The exact date I don't recollect. I think it's June 2004, but I need to really confirm the date. I'm not
Sure.
exactly aware of the date. Yeah.
No issues. How can one claim 8 lakhs in old regime? What are the tools available and respective maximum exemption?
In the old regime, right?
Hmm.
Yeah. Let me just go back to the slide I had shared. Yeah. Can you see this slide?
Yeah, it's visible.
Sorry, I just put it on slide share mode. Yeah. So one is definitely your ATC, which is your investment into your investment, your contribution towards the PPF or EPF, any life insurance premium that you're paying or any ELSS investment you do, all put together up to 1.5 lakhs can be considered. 80D, again, as I said, health insurance premium that you're paying. If you're paying only for your spouse and kids and all are below age 60, or if you're below age 60, then up to 25,000 can be claimed there. And if you're already also including your parents who are senior citizens, let's say, up to 50,000 can be claimed. Already a standard deduction of 50,000 is eligible under old regime. So that can be considered. If you're paying house rent, you're staying in a rented flat or a house and you're paying rent there and you have an HRA component in your salary, there is a way to calculate what is the HRA that is claimable. So that portion, there is 40% of your basic, then your actual rent HRA received, and there is excess of rent paid over 10% of basic, there is a calculation. So once you do that calculation, there is a particular amount you will arrive saying this is the HRA that is claimable. So that particular portion can be again considered. Leave travel allowance for that particular year, whatever you have traveled with, if that is in that block of 2 years, that can be considered. If you have a self-occupied house and you have interest on that, up to 2 lakhs can be claimed. 2 lakhs loss can be claimed. So that amount again is available. So all this put together, you can come to 8 lakhs. Suppose you have an interest, you're paying on an educational loan, right? For your spouse or kids or self. The entire interest amount. That's a big one actually. Actually, this interest on housing loan and ATE can be actually substantial along with that ATC. So these are some of the amounts can really bring up to 8 lakhs of total deductions. Then, of course, the other two are relatively small. But 8 is
Right.
again donations if you're doing. So all this put together, if it's coming up to 8 lakhs, then yes, if your income is about 35 lakhs, up to 8 lakhs is what the amount required for you to be able to claim under old regime. If it's much lesser, then very small difference in terms of what the deduction has to be. So if it's 24 lakhs, then 7.775 is sufficient for you to be more beneficial under the old tax regime.
Right. So since you're on the slides, there is a specific question, regarding one of the slides. So like you mentioned that under the new regime, there is no tax on 12 LPA, but again in the slides, it says 10% tax is there between 8 and 12
Yeah,
LPA.
that's what,
So,
yeah, I will explain that to you. See, let's assume 12 lakhs you're getting as your income. Okay. That's your CTC. And let's assume 12 lakhs is after your employer contribution of PF, because that is exempt. So up to 4 lakhs to 8 lakhs, 20,000 is the tax, because sorry, the tax rate is not coming there. Sorry for that. It is 10% here, right? 4 lakhs to 8 lakhs is 5% here, and 8 lakhs to 12 lakhs is 10%, correct? Is that clear here? 5 and 10.
right.
So it will be 5
Yeah,
and 10 here. So 20 and 40, 60,000 here is your ideal tax to be paid. But there is something called 87A rebate of 60,000 that is applicable, and this entire 60,000 gets nullified by that rebate. So that's why we are saying up to 12 lakhs, there is no tax. Not only that, but even if it is 12 lakhs 75, you will get 75 standard deduction first, which will take it to 12 lakhs. And then you get the 60,000, which gets netted off with that 87A rebate. That's how we are saying that there is no tax for a salary up to 12.75 lakhs.
Right. Right. That helps. So again, there are some questions about car lease expenses in the new regime.
Yes.
Some explanation needed for that.
Yeah. So basically, car lease is an arrangement which the employer gives to a employee. It is a scheme where the car is leased to the leasing company, and the ownership of the car is with the company. Okay. And the lease, what the lease amount is supposed to be paid is as a direct deductible expenditure. So instead of my salary being 10 lakhs, I will get that, let's say my monthly income is, let's say 1.5 lakhs, right? And let's say I'm buying a car of 10 lakhs, not through myself, but through car lease option, which the company has given me. And the lease amount, let's say, comes to 35,000. The car lease amount which the company pays. So the company deducts from my thing and shows as if the salary to me itself is 1 lakh 5 or 1 lakh 15 instead of 1 lakh 50. So what gets charged is that my monthly salary of 1 lakh 15 itself gets charged instead of 1 lakh 50. Is that clear how car lease works? The entire lease amount is a deductible expenditure from my income. It's not even my income. The whole thing goes away from my income being charged to tax.
Yeah, that's clear. I think there's a thumbs up
Yeah.
also for that. Since we are on the slide, regarding the 60K rebate under Section 87A, do we need to pay it initially or we claim it during IT filing or it's directly exempted?
Yeah, that the HR takes care of that standard deduction while calculating your taxes. When they do your TDS, the standard deduction is given. You don't have to claim it. So what the HR does based on what you declare, right? So let's say you declare, I'm going for the new regime, so I'm not, I am okay for the NPS deduction of 14%. Let's say car lease is not there, but I'm going to give my internet bills and mobile and vehicle bills. Based on these declarations, the company automatically does. I mean, I'm sure all softwares have this. The software automatically takes all the deduction available once it is fed into the system. So the standard deduction is also taken into consideration before doing the TDS on a monthly basis. That it's a given. I mean, you don't have to claim it. It is there available anyways as a standard deduction for you.
Right, right. And if this does this apply, the rebate of 60K, it applies to income exceeding 12 lakhs?
No, it doesn't apply to income exceeding 12 lakhs. So up to 12.75 is fine. You can
Hmm.
claim 75 and then this rebate of 60. But if your income is 14 lakhs, 15 lakhs, 20 lakhs, this 87A is not applicable. It's only that's why we say that up to 12.75 lakhs, it becomes zero.
Okay. There's also a question, can HRA and home loan be used together?
See, ideally, income tax talks about a very strong reason and the distance between your rented place and your house which you are living. If it's in the same city, you will really need to prove you have really done it only for a convenience sake and not for the sake of, just saving tax. Right? So many people do that, right? People lived closer to their workplaces and they let out their residences which they have purchased. And if they've genuinely done it and they can prove, I mean, actually you can claim, and if there is an inquiry, you'll have to prove that it's genuinely done and not just to save tax. The income tax says if the distance between the two houses is not uh, beyond, not within that city limits, and it's lesser than this particular kilometer, then it can't. But people do allow. A lot of chartered accountants allow, and they say as far as you can prove that this is done genuinely because you want to be closer to the workplace, you can still justify to the assessing officer.
Right.
So
Just staying on
practically, people
the
still do it.
right, right. Staying on the point of house and property, there's someone with a personal question. I had two old properties which I sold off, and I currently live in one of my own property, and I've also purchased a new one. So will I be able to claim interest benefits for my new property under the old regime, or will this be seen as my fourth property from someone who's been paying taxes?
No, no, no. It's okay if it's fourth property. You have sold those two properties. This is still
Hmm.
your second property, right? So you will be
Okay.
able to claim as both as self-occupied properties. If you have only two properties, you can still claim as two self-occupied properties. That's not a problem.
Right. Okay. All right. So just we have last 3 minutes here on the session. So let's end with a question that has been asked by 2 to 3 people about financial advisors. What do you suggest? How does one approach a financial advisor? What are the things to be kept in mind, when one is
Right,
starting financial counseling as such, or trying to
right,
get
right.
plans and advices? What would you suggest?
Yeah,
What to look
yeah.
for?
Yeah. One, definitely what I would suggest is go for a corporate rather than an individual advisor because there is continuity. For whatever reason, an individual financial advisor has his own concerns, is not able to cater to a time when you want, has limitations, or gives up financial advisory for some point of view, is sick, has his own problems. There's no continuity of advice that comes to you, right? So if there is a corporation or a company that you have, there are people employed. If one person is on leave, is leaving the company, the entire portfolio gets passed on and handed over to another person. So there is continuity of advice that is available, and also the research capabilities. The corporates have far more research capabilities. They have far more access to fund managers for calls, for discussions. They attend various seminars. There's a lot of access to all that because there is it's not just one person's expertise, right? It's a collective expertise which you get when you go to a corporate. So one to definitely go for somebody where which is a company and it's just not an individual. That is definitely one important thing that you should keep in mind. The second thing is you will have to um, understand what the advisor is charging, whether it's working in your interest. You have various ways of doing it. Find out how the person is charging. Is he getting compensated with products? If he's getting compensated with products, then is it being the is the person is the corporate being transparent about it? Do they disclose to you what is being earned out of your investments? So if there is transparency and trust, those are very, very important factors when you choose an advisor. And other important factor is expertise. I mean, for how long the company has been in existence, how have you can quiz them about which are the various situations with that they have taken care of. Are they, suppose you want to do global investments, are they capable of suggesting that to you? Are they well versed with the taxation part of it? What do they think of the markets? I mean, do they get equally hassled when the markets go up and down, or are they capable of hand holding you when you need the most? You know, if you are worried about the markets, then you behave very erratically when the markets up and down. If your advisor also does that, then that is of no use, right? Somebody should handhold you and have a little long-term vision. And it's not just about tactical calls, buy this, sell this. It's not about that. It has to be a long-term vision, and also how qualified they are. There are a lot of certifications and qualifications that are required today. So are they well qualified for handling your portfolio? And are they available for you when you want it? I mean, it's just not one transaction or one product that is done. Do they have the whole, can they show you the big picture in your financial journey, or is it just transaction oriented, buy this, sell this kind of a thing? That is what you really need to look into an advisor.
Right, that's extremely mindful advice. Thank you so much, Shantala. It's been quite a session today, a lot of queries, and thank you, audience, also for your participation. I hope this session has been helpful to all of you. Also, since a lot of you had questions regarding this, we do have financial advisors on the Wellbeing on the Web or the wellness platform that your HR provides you. In case there is because not all of them have it, but you might want to check with your HR, the wellness platform that you're currently using, if it has financial advisors as a service. And if you do, then please make full use of that. There is a 20-minute consultation available for you through this service for free. So really can't get better than that. So if this is the time, if there are some questions unanswered here, I apologize because there's a lack of time, but you can take them there in that 20-minute free consultation call. Yeah. Thank you so much.